Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the Canadian dollar Japanese yen currency pair trade setup. And this video is not necessarily about giving you a trade setup for you to go out and buy and sell. First of all, you should never take advice from financial advice from anybody, on the internet. Just randomly do your own research, but I'm going to give you a really, I suppose, a blueprint of how I go about selecting trades and levels, and I'm going to give you the top to bottom analysis from the fundamentals down to the entry, right? And the way that I approach the market. Now, some of you may be thinking to yourselves, oh, fundamental analysis doesn't work, etc., right? And it's boring, blah, 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 blah. Well, before you dismiss this video, what I want you to do is please go to my video, Trading 180 playlist, and does fundamental analysis in Forex work? And I pretty much spell out in that video why, and my case as to why fundamental analysis does work, right? And I have a fundamental analysis course which is free. The link is in the description box below, right? You get fundamental analysis course which goes through the main points of fundamental and sentiment analysis. You also get a fundamental analysis spreadsheet which I do, and in the spreadsheet I go over my bias as to which trades and which currency pairs I should be buying and selling, and if I'm going to be bullish on the dollar, which I have been all year. And you can see that the dollar is pretty much king, and I'm negative on the Japanese yen and like the Swiss franc. Then I know that I should be looking at the dollar yen or the dollar Swiss as buy trades, etc. Right? So I can pretty much predict where or if currencies are more likely to trend, or if they're more likely to be entering into a ranging market environment, and adjust my entries and strategy accordingly, right? So going back to the CAD yen. So fundamentally, why am I buying the Canadian dollar? Well, if you go to Reuters news article, October the 1st, traders boost Canada interest rate bets as trade deal clips threat to the economy. And pretty much what you have is investors are raising bets for as many as 4 additional rate hike increases from the Bank of Canada by the end of 2019, after a deal to save the trilateral NAFTA trade pact reduced uncertainty for Canada's trade-dependent economy. So if you don't know about interest rates and you're trading currency pairs, what are you doing? You really should be understanding interest rates and inflation, which is the reason why you should be taking a fundamental analysis course. But pretty much, if a country and a central bank is raising interest rates, that's positive for a currency, right? So you should see some strength coming into that currency pair, right? So if we're going to now look at the Japanese yen, right? So this is today, 18th of October. Yen slides after Bank of Japan BOJ Kuroda's comments, right? So the Japanese yen slipped against its major counterparts in the European session on Thursday after Bank of Japan Governor Mr. Kuroda offered an upbeat view on the Japanese economy and continued to back low interest rate strategy to attain inflation goal, right? So Japan's economy is expected to continue expanding moderately, right, which is good, but short and long-term interest rates will be kept at their current very low levels for a longer period, he said, right? So it would only make the bank would only make necessary policy adjustments to sustain the economy's momentum to achieve the price target. Now, what that basically means in English is that they are looking to keep their interest rates low. So they're not looking to strengthen their currency because they need to try and attain their inflation target, which is for central banks around the world, in the Western world, but in the major currencies is 2%, and they're way below that 2% inflation. Say way below, but they need to basically get that 2% inflation target. So they're just basically telling you, the central bank, the people that are trying to strengthen the currency or weaken the currency, are telling you that they're keeping the interest rates for lower for longer, right? So you got Canadian dollar traders thinking that the Bank of Canada are going to raise interest rates, right, at some point, and then you've got the Bank of Japan governor telling you that they are looking to keep interest rates where they are. So what should you be buying? Strength versus weakness. Go back to the chart. We should be buying the Canadian dollar over the Japanese yen, right? It's pretty much as simple as that. Now, what we do from a technical perspective is look to see where we are, right, price-wise. Are we buying on the pullback? Are we buying at the highs of the markets, lows of the markets, etc.? So this was a level, and I don't cover it necessarily in my weekly analysis. This currency pair, it's not really a major currency pair, but this was a demand zone that I had pretty much drawn from weeks ago, and pretty much waiting for price to come down into a any kind of demand zone that will give me, and then wait for an entry, right? So as we're waiting for the entry, right, this was a demand zone here as well, right, but there was no entry here, right? The market obviously didn't think that there was value in this area. The Japanese yen will strengthen on, also as a side note as well, the Japanese yen will strengthen on risk sentiment, right? So I'm not saying this trade is going to work out, because risk sentiment meaning if there is uncertainty in the world, let's say for example trade wars, fears around the Italian budget, etc., right, then the Japanese yen is a safe haven currency, so it tends to benefit when there is a risk off environment, right? So that being said, we have to now just make our bets and place our trades at levels where we think we're going to see potential value in the market go in our direction, all things being equal. And we're talking about the fundamental analysis. Sentiment, right, risk sentiment can mess up this trade, right? But I can't be concerned necessarily about risk sentiment when entering into a trade based on fundamentals, right? So right now, we came down this week, a couple of days ago, into this demand zone. So looking at the technicals now, I'm looking at value. So I'm entering into my trading time frames, right, which I trade on the 4, the 6, the 8, the 12, and sometimes the daily time frame chart. So we've come down into this demand zone. Let me delete this. And what I've seen is this outside candle, right? Outside candle entry, which is one of my favorite entries, a brilliant entry to, take a trade, right? And stop just below the low. And now what we're going to see, what I'm hoping to see, is prices obviously, go further up and go further higher, right? Based off of the fundamentals and potential sentiment, positive sentiment around the Canadian dollar if we are in a risk on environment, right? So also what we got going on with this trade is not just an entry, but also we got a demand zone, and we also have the supply and demand equation in place. So supply and demand equation deals with forced supply and forced demand, and willing supply and willing demand. And if you want to understand what I'm talking about, then I have also another course, free Forex training, supply and demand order flow equation. And in that video, right, I go over why there should be more supply or more demand within an area of supply or demand, or just at a certain price from a technical perspective. One of the things that we use, a couple of things that we use, is horizontal support and resistance and dynamic support and resistance, and we also use diagonal support and resistance. So from a technical perspective, right, we have horizontal support and resistance. And if I zoom out, what you're going to see, right, from the daily perspective, is not only do we have a demand zone value, we also have resistance, 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 bit of support, bit of resistance, resistance, right? Prices broke through, bit of support here. Prices didn't really react. We got some support here, right? So we've got not only myself, supply and demand traders entering into the market, we also have support and resistance traders entering the market, and that would be willing demand, because they're willing to enter a trade and they're watching this level, right? So there should be buy orders at this level, providing the right price action takes place, or their price action takes place within that area, right? So we've got demand coming in from a value perspective. We've also got demand coming in from a technical perspective, support and resistance traders. What we also have is dynamic support and resistance. And again, please, I urge you to go and watch the supply and demand order equation video, and explains this. And we use moving averages, right? Certain moving averages, 100 and the 200 MA, as well as the 21 and the 50 as dynamic support and resistance zones, right? And you can see that we have the 100 and the 200 EMA and SMA coming into this area, right? So again, we have willing demand from traders who use moving averages as dynamic support and resistance, right? Bounces, first touches once prices have crossed up or down. And again, I go into it in this video, right? Right here, right? Supply and demand order equation, right? And why there should be more demand than supply, or more supply than demand from a technical perspective. So going through all that and wrapping this video up, quickly, don't want to necessarily make it drag on too long. What I have is a fundamental edge over traders, potentially, right? I have a fundamental edge from an interest rate hike and interest rate strength perspective. One central bank is looking to hike interest rates potentially, and the other one has come out and told you that they are looking to keep interest rates as low as possible and not looking to hike, right? So you've got a divergence in policy. That's the reason why we should be buying the Canadian dollar over the Japanese yen. Then we go to the price chart and we look for, demand zones, right, in our favor. Look for where price is, looking for a pullback, and then we look to build a case for our entry, right? And this is, again, just some of the analysis. This is not all the analysis that I go through, but this is just some of the analysis that should help you out in obviously looking to take trades and look to take better trades. These trades and setups don't occur every day. There are opportunities every day to make money, but not the right opportunities every day to make money, right? So again, Canadian dollar, Japanese yen, if you aren't in this trade, right, don't worry, there's an actual opportunity to get in. Don't FOMO into this trade, please. If it's not in your rules to enter this trade, then it's not in your rules to enter this trade. Don't take my advice. This trade could lose, right? There could be some negative sentiment, and this might not work out fine, right? Then if prices come down here, I'll be doing exactly the same thing, and I have potentially even more upside, right? Even more upside if I get in and I can trade this up to the highs and looking for 6, 7 to 1s, etc., right? So if you do want to find out more about supply and demand and the way that I trade supply and demand, loads of odds enhancers, because not every supply or demand zone is created equally, as well as the capture pain relief zone course, right, which I go over the psychology as to how to take advantage of losing traders' psychology, as well as managing your own psychology. Just click on the link in the description box below, and you can access the supply and demand Forex zone course, right? It's 30-day money back guarantee as well. So if you're not happy with your results, I will give you your money back free of charge. And I don't believe in keeping anybody's money if it doesn't work for you, right? It works for me, and hopefully it can work for you. But I know that me personally, I've bought on my trading journey, I've bought courses, spent thousands on courses, and wish that somebody would have given me my money back when I spent money on those courses that really didn't work and that were very basic. So it's me basically just saying to you that I'm genuinely trying to help you trade, and if it doesn't work for you, it's literally risk free. I don't believe in keeping anybody's money, because I've been through that, and I'm sure you have as well, and spent a lot of money on courses that are pretty much a lot of free stuff that you can get off the internet, right? Anyways, Hope you enjoyed this trading video, and if you do have any questions, just leave a comment in the section box below or email me at info@trading180.com. Take care, and speak to you soon.